statement supporting notes. With supporting notes for Endless Company. Now, Endless Company provided the following information for the year ended December 31, 2020. As we have to prepare an income statement with supporting notes, we now begin with net sales in note number 1 for 8,600,000. So note number 1, sales of 8,750,000, and then we deduct sales returns and allowances of 150,000. We have the net sales for 8.6 million as forwarded in the income statement. Then we have the cost of goods sold as found in note number 2, merchandise inventory. And by the way, this is a merchandising business. Merchandise inventory in January 1, 4.6 million. That's your merchandise inventory January 1, 1.1 million. I'm sorry, 1.1 million. And then we add purchase 4,600,000. We add freight in of 145,000. This freight on purchases, freight in. And then we deduct purchase discounts of 45,000. So we have now the difference net purchase of 4,700,000. We add this to the beginning merchandise inventory. The total is goods available for sale of 5.8 million, and then we deduct the merchandise inventory end of 1 million. So that's the inventory at the end of the period. So the difference now after deducting the inventory end is equal to cost of goods sold before the write down. Now stated inventory at year end was valued at 850,000. We have 1 million cost less 150,000, the write down of inventory to net realizable value. So if your cost of goods sold before the write down was 4.8 million, and then we deduct the inventory write down of 150,000, the cost of goods sold after the inventory write down is 4,950,000. Now we have 4,950,000 cost of goods sold deducted from net sales revenue. The difference is gross income. Then from gross income, we add here to gross income, we add other income 80,000. That's in note number 3. Other income includes dividends revenue in the amount of 50,000, and then gain on sale of equipment for 10,000. Okay, gain on sale of equipment, and interest revenue equal to 20,000. The total of the other income of 80,000. Okay, so we have now for the total income after adding other income. Total income is 3,730,000, and then we deduct distribution cost in note number 4, administrative expense in note number 5, and other expenses in note number 6 of 50,000. So we now get 2,450,000. Now let's look at the inclusions to note number 4. Distribution cost includes delivery expense, depreciation of the delivery truck and of the store equipment, sales salaries, and store supplies. So we have now your distribution cost. Then in note number 5, we have administrative expenses, including contribution, depreciation of the office, then doubtful accounts or bad debts, and office salaries. And finally, other expenses includes loss on sale of trading securities. Now let's go back to the income statement proper. We have now your total expenses deducted from total income at 1,280,000, and then we deduct the income tax of 280,000, leaving net income equal to 1 million. So that's now your income statement. In problem 4, that's 2, and we have the corresponding supporting notes. Next, we go to problem 4, that's 3. Okay, for the three of Berna Company. Berna Company, now we have the requirements. Prepare an income statement for the year ended December 31, 2020, and statement of financial position on December 31, 2020. So first, in letter A, we have income statement beginning with sales. Net income for the current year was 1 million. And then, how do we determine our sales? Given in number 6, expenses were 30% of sales, no? That's one item. And we have now in number 5, finished goods remaining in stock were equal to 25% of the cost of goods sold. Then we have net income for the current year equal to 1 million. And as we have now your additional data, raw materials on hand, manufacturing cost, goods in process, finished goods, expenses, cost of goods sold. 90% of sales were collected. The balance was considered collectible. 75% of the raw materials purchased were paid for. There were no expense accruals or prepayments at the end of the year. Now, as given, the company was organized on January 1, 2020. 25,000 ordinary shares of 100 par value being issued in exchange for property, plant, and equipment, and the value that's 3 million, and cash of 1 million. Okay, so what is our actually we have the cost of goods sold figure is given, and now we have the cost of goods sold is 45%, and net income is equal to 25%. Now we have the computations at the bottom. If our net income is 100% minus the 45% cost of goods sold, and we deduct 30% as our expenses, so the difference of 25% is the net income. And we are given the net income for the current year equal to 1 million, and if it is equal to 25%, then dividing 1 million by 25%, we get 4 million. That's the amount of sales. If sales is 4 million and cost of goods sold is 45%, 45%. So 45% of 4 million is 1.8 million, giving the gross income of 2.2 million. That's the gross income, and the expenses equivalent to 30%. So net income is 1 million. Okay, so we have now your computations. Purchase 1.5 million divided by 75%. Okay, so that's now your purchases. And we have raw materials on hand on December 31 were equal to 25% of raw materials used, purchased. That's now your raw materials on December 31. 25% of 2 million is 500,000. And we have now the amount of raw materials used is 1,500,000. It's the difference between 2 million and 500,000, or it's 50% of 3 million. So we have now your difference for the raw materials used, 1.5 million. Then we add direct labor equal to 30%. Now we are given the percentages here. The raw materials used is 50%. So we now compute 50% times 3 million. Direct labor is 30%. So it's 900,000, and factory overhead is 20%. So it's now equal to 600,000, and we get the total equal to 3 million. That's the total manufacturing cost. Okay, so the total manufacturing cost is 3 million. We add the goods in process on December 31, which is 1/3 of 2,250,000 goods in process remaining in the factory on December 31 were equal to 33 and 1/3% of the goods finished and transferred to stock. So we have now the cost of goods manufactured of 2,250,000, and then we deduct the finished goods inventory at the end, equal to 25% of the cost of goods sold. It gives us the cost of goods sold equal to the amount of the cost of goods sold given above. So it's 1.8 million. Okay, now we compute for the cash receipts, the cash investment given at 1 million, and the collection is stated to be 90% of sales. So we get the total cash receipts. Then we have the cash disbursements, purchases, 75% of the amount of purchases of 2 million. Then we add direct labor and factory overhead is 600,000, but this includes depreciation of 100,000. So we deduct because we do not pay for depreciation. And we have the operating expenses of 1.2 million. Okay, no accruals given. So we have now the total cash disbursement. So the cash balance on December 31 is 500,000. Now, in addition, we are required for statement of financial position at the end of the year. So we now have cash given or computed in the previous schedule, 500,000. Then we have accounts receivable, 10% of sales. So 400,000 inventories in number one computations, raw materials, goods in process, and finished goods. So we have now total the inventories, or you may actually show the breakdown of 1.7 million. non-current assets, property, plant, and equipment, we deduct the accumulated depreciation given of 100,000. Total assets of 5.5 million. Then for the liabilities and equity, the current liability, accounts payable 25% of 2,500,000. Now take note that we have the amount of purchases. Then the equity ordinary share of 100 par given 2.5 million. And we have now the share premium of 1.5 million and the retained earnings of 1 million. Now as total of the equity of 5 million, the total liabilities and equity which is equal to 5.5 million. Okay, now all these data are determinable based on the breakdown given. Here in requirement number 2, we are asked to prepare statement of financial position. Now take note that we have the retained earnings of 1 million as computed in our net income. Net income is 1 million. So that's now the amount that we carry over to the statement of retained earnings. So the amount of 1 million. And we have now the ordinary shares of 25,000. You multiply by 100, so that gives us the ordinary share capital equal to 2.5 million. And in lieu, the company received plant and equipment of 3 million and cash 1 million. So that makes 4 million minus 2.5 million. The share premium is 1.5 million. Okay? So that's now your total liabilities and equity and with the corresponding notes. Then we go to problem 4-4. Use company provided the following data for 2020 and we have to prepare an income statement. So in the income statement, we show the net sales revenue as note number 1 shows sales of 9,070,000 and then we deduct sales returns and allowances of 200,000. So we now get 8,870,000 for the net sales. Then cost of goods sold of 5,900,000 as found in note number 2. We have the beginning inventory of 1.5 million and then we add purchase 5,750,000. We have transportation in of 150,000 and then we deduct purchase discounts. Normally, that's a credit. So, we deduct it, 100,000, giving us the net purchase, 5.8 million. Added to 1.5 million, we now get the total goods available for sale of 7.3 million. Then, we deduct the ending inventory of 1.4 million. The difference is cost of goods sold of 5.9 million. That's extended to the income statement, leaving the gross income of 2,970,000. And then we deduct the expenses, distribution cost, and administrative expenses and other expense. We now refer to notes 3, 4, and 5. So note number 3, distribution cost, includes depreciation of the store equipment, store supplies, and sales salaries for the total of the distribution cost, administrative expense, officer salaries, depreciation of the building and office supplies. So the total of 580,000. And finally, for the other expense, we have the uninsured flood loss of 340,000. Now, for the total here of your net income in 4-4, net income of 1 million. Okay, we have the corresponding notes also. Then we go to problem 4-5. This statement of comprehensive income as required comprehensive income. Now we begin with dividend income from investments of 9.2 million, and then we have the distribution income from trust of 500,000, interest income on deposits of 700,000, then income from bank treasury bills of 100,000, income from dealing securities and derivatives held for trading 600,000, but we deduct 150,000 as the write down of securities and derivatives held for trading. So we have now the other income elements of 250,000 other income. So we now get the total income of 11,200,000, and we deduct the expenses of 3,800,000, sundry administrative cost of 1.2 million, and we have the finance cost equal to 300,000. So the total of the expenses 5.3 million, income before income tax 5.9 million, deduct the income tax expense of 1.7 million, net income of 4.2 million. Then we add other comprehensive income to be reclassified to profit or loss. So unrealized gain on forward contract designated as cash flow hedge for 400,000. So we have the total comprehensive income of 4.6 million. So actually, we just prepare statement of comprehensive income. Now, we have various income elements, but you will notice that we have no sales here, nor cost of goods sold. So the company is more of an investor with dividend income, distribution income, interest income, but not selling merchandise. Now, in problem 4-6, okay, 4-6, we have again prepare a single statement of comprehensive income for the year ended December 31, 2020. We have two methods of preparing the statements. One is the two-statement approach, where you have one statement is the income statement, and the other is statement of comprehensive income. While the other one is the single statement approach, where you are going to combine both. So we have the adjusted trial balance of Dahlia Company, included the following accounts on December 31, 2020. So we now have sales 9.5 million, and we have cost of goods sold given at 6 million. So the gross income of 3.5 million, and then we add other income of 350,000, thousand representing the share of profit of the associate. 350,000, and we have other income for 350,000. Interest income and gain on sale of equipment. So all in all, we have the total income of 4.2 million. Okay? So we have the gross income 3.5 million, and then we add other income. Supposed to be, you should have a note for this. Other income includes interest income of 250,000 and gain on sale of equipment of 100,000. So the total income now of 4.2 million, and then we deduct the expenses including distribution cost of 500,000, administrative expenses of 300,000, and we have the finance cost of 150,000. So the total of 950,000, we have the income before income tax. So if you have the income before income tax, and then we are going to deduct the income tax expense of 950,000. Finally, we have your net income of 2.3 million. Then we are going to reflect other comprehensive income to be reclassified to profit or loss. We have now the translation loss equal to 200,000. We have to deduct since it's a loss. So for 200,000, we are going to deduct. We have other comprehensive income not to be reclassified to profit or loss. So we have the revaluation surplus during the year. The revaluation surplus during the year of 1.2 million, giving the total comprehensive income of 3.3 million. Now, your interest revenue and gain on sale of equipment, this is in order to support your other income below your gross income. So, you better write other income, and that will be Schedule 1. Schedule 1. So, in Schedule 1, you are going to show interest revenue and gain on sale of equipment. So, the total of the other income in Schedule 1 is 350,000. Now, you have to add. Okay? So, that's for the 6. And anyway, I gave you up to for the 22. Some of these are multiple choice problems, and some are multiple choice theory. Okay, so we now have for the 7. Okay. By the way, tomorrow I will give 4-8 up to 4-22. So you have to study this. This will be the source of your exercises tomorrow. So we have now for the 7, the adjusted trial balance of Lotus Company included the following accounts on December 31, 2020. So prepare a single statement of comprehensive income for the year ended December 31, 2020. So we have now problem 7 of Lotus Company, statement of comprehensive income year ended December 31, 2020, where we have the amount of sales of 9,750,000, and then we deduct cost of sales. Now we have 250,000 plus 3.5 million. So 250,000 decrease in inventory of finished goods. So you say inventory beginning is higher than ending. So meaning you have to add. Normally, your finished goods inventory, we add the finished goods inventory beginning and we deduct the finished goods inventory end. So that if there is a decrease in finished goods inventory, meaning bigger ang beginning than the ending. So meaning we use the sign of the beginning because it's bigger. That's why we are going to add 250,000. We add it to raw materials and consumables used of 3.5 million. The total is 3,750,000, the amount of cost of sales. So sales minus cost of sales, we have the gross income difference of 6 million, and then we add other income. Other income of 300,000 and share of profit of associate. Share of profit of associate of 150,000. That's part of your other income. So the total income is 6,450,000. Then for the expenses, we deduct employee benefit expense of 1.5 million. We deduct depreciation of 450,000. Deduct finance cost of 350,000. Deduct other expenses of 450,000, and we have the impairment loss of 800,000. So the total we deduct from the total income, we are going to deduct the total expense of 3,550,000, giving us the income before income tax of 2.9 million. Then from 2.9 million, we are going to deduct the income tax expense of 900,000. Then we have your net income equal to 2 million after deducting the income tax expense. Then to net income, we have other comprehensive income to be reclassified to profit or loss. We have the translation gain of 300,000 and the unrealized gain on option of 200,000. So we have now the unrealized gain on option. Unrealized gain on option contract designated as cash flow heads for 200,000. So this gives us the total comprehensive income of 500,000. However, since we have the comprehensive income here of 2.5 million as required by the problem, okay? So we have now the comprehensive income. Okay, for your assignment tomorrow, then you work on all the multiple choice problems and the theory up to problem 4-22. And by tomorrow, we are going to begin with the exercise. So you can open your canvas. Diretso na lang kamo sa canvas. You can open the canvas at siguro mga 9:10. Open the canvas. That will be good only for 15 minutes. So after that, we are going to take up the solutions to the problems, and then we proceed to chapter 5 for the statement of changes in equity. Okay, so is there any question before we end? Now you just come back this afternoon, open the canvas at 4 o'clock. Okay, so open the canvas at 4 o'clock for your long quiz. So any questions before we end? Wala na? Wala na siguro.